Welcome to Upthinking Finance, a podcast that offers a unique and discerning view of economics and financial planning. Here is your host, Emerson Fersch.
Welcome to another episode of Upthinking Finance. Canadian author Eric Butterworth once said, "Faith is expectancy. You do not receive what you want. You do not receive what you pray for, not even what you say you have faith in. You will always receive what you actually expect." Well, there's a lot going on in the U.S. Just in the last week, the Fed lowered interest rates 50 basis points. The long-awaited pivot apparently has arrived. We've got a presidential election coming up in a couple of months, and just a constantly shifting geopolitical and geoeconomic landscape. So I thought, who better to bring back than a return guest, Peter Cavelti, who's coming to us from Canada today. He was on episode 46 back in February, for those of you who may remember. He's got an investment background that spans 50 years. He's written a number of books and published essays that have been appeared all over the world, actually. He publishes a quarterly newsletter on his website called Strategic Updates, which is available at www.cavelti.com. And for anybody who's looking in just quick, brief, and understandable summaries of what's going on, that's a good place to start. So it's my pleasure to welcome back, coming to us from Toronto, Canada, my friend Peter Cavelti. Peter, welcome back.
Thank you, Emerson. Nice to be here.
So when we last spoke, you were in Colorado, and it didn't occur to me until we were done with our interview that if anybody's curious to how cold Canada is, Peter winters in Colorado. So that gives you some idea that that's a warmer climate in the winter than where you are currently. Is that about right?
Absolutely. I find Colorado balmy and warm in winter. Primarily, it's not just an issue of temperature, it's also the humidity, which is all-encompassing here in Ontario and the eastern part of this continent, really. And in Colorado, it's bone dry, so the cold does not affect you in the same way. Plus, I'm a skier. I grew up in the Alps, so it's heaven for me. Yeah.
Well, that's perfect. Well, good. Well, listen, it's great to have you back. I mean, it couldn't be a better time to be talking economics. And for anybody who's not aware, Peter writes an exceptional quarterly newsletter, or maybe occasionally more, depending upon what's going on in the world, at www.cavelti.com. It'll be on the screen for those of you watching on YouTube. But really just good updates, right to the point, English. You can understand what you're writing, and I just really appreciate it. So I guess the place to start in my mind is your last newsletter. We talked about the impending rate cuts. Well, that's happened now. We know it was a half a point. And there's so many ramifications. I mean, I guess if there's one thing that happens that really impacts almost everything, not just here in the U.S., but in some senses globally, it's Fed policy on rates. And so maybe let's start with the dollar, because that's one that people talk about a lot. What's going to happen to the dollar? And so I know you could go off in a number of angles there, but let me throw that in your lap and we'll start there.
That's the most intriguing one, the dollar. And as you know, Emerson, I've said for the last several years, in stark contrast to the popular opinion, which is the BRICS are coming into being, the dollar is doomed, all this stuff. International capital flows are always going where it's best relatively. You can live in a place which is dysfunctional. If the other places are more dysfunctional, then you still attract capital, basically. And right now, when you look at Europe, much of Europe being in recession, really, in my opinion, firmly in recession. And, the two big ones, Britain and Germany, just look terrible on any metrics. You look at Japan, not an inspiring model either. China is also economically very weak. The United States is also in a weak spot, but on a relative basis, I would not predict a dollar collapse just yet. And if you asked the question, what really mattered with this rate cut? And let's just assume there's just one. There could be several additional ones. My tendency is to believe that the economy is considerably weaker than the Bureau of Labor Statistics, the federal government, the Fed tell us it is, in which case we may get other rate cuts. And at one point, the U.S. Policy rate, the Fed policy rate, is going to be lower, you'd think, than the policy rate in other nations, which is not yet the case. But that may not happen either, because if the Germans, if the Europeans, let's say broadly, and keep cutting their rates, and other nations do too, then the US on a relative basis still has an attractive policy rate. I think what matters much more with the dollar is really related to the overall debt structure of the United States. We're now at the first time in a position where cumulatively this year, and this is only September, the interest paid by the Treasury on the federal debt has surpassed $1 trillion. First time ever. Big, big difference to previous years. And what that, you could say, well, if rates keep dropping, that burden will become less. But you have another problem, which is the United States of developed nations issuing debt, which they all do, is the one that really depends on foreigners to finance that debt to quite an extent. And those foreigners are becoming more and more reluctant to buy US debt. We see that at the weekly auctions. And why is that? Well, one big factor is really if you are Argentina or Nigeria or China or Russia or Kazakhstan, and you've been in the past buying US Treasury bonds, you look at this aggression on the sanctions policy the United States has. The implementation of those sanctions frightens those people off. And so you have countries like China, which are doing exactly what I would do in their position. They're saying, well, it looks like we're not going to be in agreement on a number of things with the United States in the future. And we're at risk buying that nation's debt. So instead of buying it, we're going to dispose of some, and they've been buying gold. Anyway, as to the immediate fate of the dollar, I can't talk much about it. It depends on relative capital flows, relative policy rates. But there are factors like the BRICS and other things that are going on. Mainly, in plain terms, other nations are looking at alternatives to trade settlement currency being the US dollar. They're looking at other alternatives for international payment systems than the dollar-based SWIFT. They're looking at denominating their commodity exports in their own currency, and so on and so forth. And that is an ongoing thing with the dollar. That doesn't mean its decline is going to be imminent, but it means it's coming, irreversibly, in my opinion.
You just said a mouthful because you covered a whole bunch in there that I want to dissect a little more. No, this is great. And yeah, okay, so back to the BRICS. I was at a conference, I've shared this on another interview or two, where I brought up the BRICS, and it was basically dismissed as a bunch of nations who don't get along and who couldn't possibly coordinate anything. And, my brain kind of went the other side, and I thought, well, maybe the fact that a bunch of nations that don't get along are still trying to coordinate something is really the way to look at it. And I guess that would be the question. I mean, I know you brought up a kind of a point in your last commentary, I think it was, that the idea of some of these countries completely severing their economic relationships with the U.S. is a bit far-fetched. But it sounds like from what you just said, it's more of just this idea that there's this trend developing, maybe. Is that a better way to look at it?
Yes, absolutely, Emerson. You just hit the right word. It's a trend. It's a trend that basically, when you go to the root cause of this, so you have the United States that amongst non-aligned nations, amongst allies and amongst foes, there is really the question that arises more and more often in people's mind when they look at the United States. Are we still willing to be led by the United States? Is the leadership style, the leadership quality, the moral authority that the United States once had, is that still there, or is it waning? And there's a whole spectrum of views on that. Some views are, well, it's waning, but it's still the best we have. Others are saying, well, we got to look for alternatives. So now you have two options for the United States. Option number one is to look into the mirror and say, hey, we're doing some things wrong. We need to modify a few policies, regain our moral authorities, and we'll be respected again by more and more nations. The other thing is to just say, well, we're going to show those guys who's boss and resort to power play. And the sanctions and the tariffs are a power play, basically. And that's not going to restore moral authority or the loyalty of others at all. Because, I look at a simple case like in the first Trump administration, Canada was targeted with aluminum and steel tariffs. And then the Canadians kind of got outraged and said, what's this about? And the US administration said, well, it's a national security issue. Well, hello? Who's the nation that trots along with the US on every foreign initiative, in the forever war, whatever? Well, Canada is among those, right? And so how can we be a national security threat or issue? So those are the things. So now you have the BRICS. You have the nations that are not allies, but they're non-aligned to quite an extent, or they're actually termed to be foes of the United States. You have the BRICS, Brazil, Russia, India, China, South Africa, and as of late, a whole bunch of other nations like Saudi Arabia, United Arab Emirates, Brazil, and so on. Argentina joined the club, and so on and so forth. And then you also have the Shanghai Cooperation Organization, which is another very powerful club. And those two are now officially declaring that they're looking for alternatives to the rules-based world order that's been in place since the end of World War II. And I think you can't blame those nations for looking at alternatives. Now, the question is this a trend? As you said, yes, it's a trend. Does it mean some collapse of, say, the dollar or US-based payment systems or trade system is imminent? Not in my opinion, because you have clearly a number of nations who are very serious about that, and that's most notably the foe camp. China, Russia, and Belarus, and a few others that the US officially considers rivals or foes. But you also have a number of countries like India, Saudi Arabia, the United Arab Emirates. And I think they are very, very curious, and they want to be part of it, but they also want to hedge both sides. So they want to be on the inside and know what's going on, but at the same time, you cannot count on the fact that they will just go in the opposite direction of the United States. And that, in my opinion, is really widely misunderstood about the BRICS. People out there are a lot of foreign exchange strategists and newsletter writers who say, oh, the dollar is doomed, America's going to go down the tube, the BRICS are rising now. And when you really look at what the BRICS have done, they've been talking for 2 or 3 years now about a commodity-based currency that they will come up with. And every time they have a meeting, it's not on the agenda, other than sort of a topic that's going to be pursued. And in time, I think that may well happen. And that's not good for the dollar. But right now, it's a trend that's no longer in its infancy, but it's in its youth, probably.
Yeah, that's a good way to put it. And I think you're right. There's always extremes. Like I said, there's the people that are predicting doom and gloom, which you've been in this industry longer than me. We've talked about that. You've seen that before. Whenever there's some kind of a change in the air or fear or whatever, there's always extremes. Then you have the other people who just dismiss it. And I was listening to you and I was thinking, what's interesting is I interview and talk to a lot of people that are, from I'll call it a foreign perspective, whether it's from Europe, you're in Canada, who just have a more of a global background. And there seems to be, at least when I talk to U.S. economists or analysts, here there just seems to be this, I don't even know how to label it, but it just sort of a perpetuate the system kind of approach, that nothing has changed. It actually, when I get this commentary from people, that it seems very, I don't know, two-dimensional maybe. It's a limited, it stays in this lane. It's like, well, this is what we've always done, and and there's no willing to adapt or even consider anything that might threaten that status quo, and so to that point, I want to go back to the debt because, in the entirety of my career, and probably, I don't know how much it's influenced yours, but that's always been this little thing going on behind the scenes, the accelerating debt, and it never seemed to matter when rates were going down. And then all of a sudden, we had this bump up, a few years ago, and the emperor's not wearing any clothes now. I guess my question to you is, because you also brought up points about foreign actors, which I want to get to that, but I mean, does it matter at this point? I mean, are we finally at the point where the debt does matter? Or do we I read an article on Zero Hedge the other day. I remember who wrote it, but it was this thing that essentially said, well, you can just keep printing money, and the dollar gets devalued. I mean, at some point, doesn't this just come to a head?
Yeah, it does. And, you can say, when will it matter? Well, I think it matters right now. I mean, the one thing in my last newsletter that I wrote is that, whether rates go down 0.25% or 0.5% or 0.75%, it doesn't matter. What matters is how much is anticipated already by the market. Okay. Now, interestingly, the 10-year Treasury yield right now is as high as it was before the 0.5% rate cut. So the market evidently anticipated this. And, if interest rates keep dropping, as I said, the servicing cost of the debt, the interest cost is going to decline a little bit. But basically, I see no difference between the two mainstream parties in the United States, and you only have two. It's a little more complicated elsewhere, but I see no difference in terms of how they see the evolution of the debt. Both parties have very, very expensive things they want to do. And they're dominated by really external influences. And the external influence is not the citizen. The external influence is the monopolists. And, one very expensive thing for the United States, it's a great business model for the defense industry. But it costs the state a huge amount of money, is pursuing the forever war. Is that going to go away? No. And so the debt, when will it matter is really your question. I think it already matters, because when you look at those same forces that create this mega debt, those are also the forces that have essentially brought to the brink the dynamic called the American dream. When we talk about the American dream, I mean, it's always interesting for me to be in this place of great wealth called the Aspen Valley, and everybody talks as though somehow the American average person is just not performing the way they used to. And, it's the end of the American dream. But if you look at how people work now and this and that, that's not the cause. The cause is, number one, the monopolization of the economy. And, why is that really in place to such an extent in the United States? It's in place because you have, in the entire developed world, there is nobody who has campaign finance laws the way you have, where campaign support is virtually unlimited. And at the same time, you have a legislature, both sides, Senate and the House of Representatives, that have no term limits. Now, is anybody surprised that under those circumstances, the political spectrum is basically owned by big monopolies. And those big monopolies are why you have this collapse, unimaginable 10 years ago, of the middle class and this vast expansion in the income and wealth gap. You know, when you look 20 years ago, the average Chinese middle class person had animal protein 2-3 times a year. Literally. This is amazing. And China has this vibrant middle class now. The United States middle class was the envy of the world 20 years ago. And the wealth and income gap have grown so much that it's the biggest gap in the developed world now, the developed economies. And that's a big, big problem. And I think the debt, the perpetuation of the debt is another manifestation of it. And the question is, will there ever, or at what point, will there be a change in that dynamic and this whole ballooning thing? The forever war, the monopolization, the wealth and income gap, the size of the debt. And monetary history tells us that this has happened numerous times before. And there always is a point where it changes, and that depends, the outcome can be vastly different. It can be social upheaval. We've had that, attempts at revolution, that kind of thing. It can also be something totally different, like the United States is in a kind of, you could say, enviable position because a lot of creditors are foreigners. The United States could declare default. It could demand a haircut on the repayment of the debt. All those manifestations have been done before in one place or another. And when hegemons collapse, it's usually quite ugly, but there are technicalities that can be introduced that might get the US off the hook for part of its debt. Yeah.
You brought up something I've had conversations with clients with, depending upon, I guess, where they're at and kind of seeing the world and what their perspective is. But because I brought that up too, the idea of default. Like you said, it wouldn't be the first time, but you had that's exactly. I appreciate you bringing that up because that is exactly where my mind has gone. There's a point where you can't just have your head in the sand and assume that a government's AAA plus rating, whatever it is, means anything at some point. And that's the kind of extremes that I think people, need to be prepared for, however you do that, because that's, in my mind, real. You start looking at these, you brought up, I was going to get back to the foreign role in debt, but you brought up this I guess, socioeconomic dynamic, which is, this people in the middle, and you've got this group that I guess would be, our generation, the baby boomer generation, that was able to operate in sort of more reasonable circumstances. I'm on the tail end of that, but and then you've got like my partner, Amy. She's in her late 30s. She's that millennial generation that fortunately she's not in that situation. A lot of her peers, the huge amounts of student loan debt, and and the more that the money is printed, the less and less you get for your money, and that's the thing. You said it in the beginning, that these numbers that are getting reported, the inflations, I hear that and I think, who's based on what? I see people, particularly where we live now in this community, that are struggling, that are having a hard time, putting food on there. I'm not exaggerating. I mean, it's true, where they will shop a gas station to save a penny a gallon. And even when you buy, it just seems like you get less and less anymore. So it's and then I'll throw another dynamic into this. Charles Hugh Smith, a guy, if you don't know him, you'd love him. Yeah, okay. He wrote something, just maybe this was last weekend, and he talked about how we're at this point with all this, this wealth gap, that there's sort of this interdependency. Everybody, even the person on food stamps, the welfare person, everybody is so dependent on the status quo because they're stretched so thin. It's almost as if there's a fear of, what comes next. It's a really interesting dynamic. It's like this rubber band. The only thing I can think of is it's been stretched and stretched and stretched. At some point, it's going to bust. Anyway, I don't know if there's a question in that, but it's kind of an observation.
It's an interesting discussion. I mean, and one thing we haven't touched on as a destructive force to debt is just inflation. Inflation is always the debasement of the currency, inflation, and so on. But back to the, yeah, I mean, it's just interesting how these things can play out. And when you talk about the inflation rate, that's an interesting one. I've always viewed business people, especially people who own small and medium-sized businesses, as people who have to bow to the force of consequences. Whereas, they can be opportunistic and all that, but politicians are typically opportunists who never have to personally pay for the consequences of their actions. And that is the system that's in place. It's very, very difficult to argue against that reality. And when you that means that politicians get away with often saying things that they know absolutely is just not true. And that goes in all realms of politics. You look at geopolitics. What did Winston Churchill say? He said, the first casualty of war is always the truth. Okay, we know that. I mean, stuff we've been told about Afghanistan or Iraq or whatever, the justifications for one chapter after another of this ongoing thing is typically a castle of lies. When you look at economic stats, always distorted, not just in the United States, in France, in Spain, in Italy, everywhere, in Canada. You look at what the government recently admitted to with labor statistics. Remember that a couple of weeks ago? Hundreds of thousands of jobs that were reported. Oh, we're sorry, they never existed. We made a mistake, we made an error. When you look at inflation since the 1970s, continuously, the calculation methods of inflation have been adjusted. If you were a skeptic, you'd say manipulated. And then they go in and change something because there is a particular emergency, food or fuel related, and then after the emergency goes away, it's not reversed again. So if you use 1970s inflation calculation methods, you'd have a much bigger rate now. But all of this discussion we're having about inflation numbers presented by the government being real or not, does it really matter? Does not everybody understand that? Every citizen? We all go to the store. We all buy food. We know what's going on. So who pays attention to that inflation rate? I guess the Fed does. And if you look at, who is the Fed? Who are the Fed governors, I think? Is it one or two out of the whole lot that have ever worked outside of the Fed? I mean, that's the reality. So they believe in that, and their econometrics is their language. And, but to the ordinary person, I think they understand. I think every business owner understands.
It's hard for me to embrace or envision a continual move along the way it's been for the last, say, 15, 20 years, in terms of it just doesn't seem like it's sustainable. I can't even quantify that with anything other than it's just a feeling. Maybe I'm getting older. I don't know. But, you see people in a community where I live. Again, I'm just, here in southern Utah where cost of living is pretty low, and yet people struggle. And then I look at California, where I grew up all my life, and yet somehow people seem to be managing. I don't really understand it, but there seems to be a smoke and mirrors element of what's going on here, in my view. And anyway, that's just me observing. I don't have anything other than just kind of my own gut.
Well, those are important points. And when you look at investing, I would say when something becomes as much in your face as what we're seeing now with things like debt and inflation stats that don't make sense. What I think that means is you want to become more reluctant to invest in promises. So like I always feel investing in somebody else's liability is not a particularly good idea at this stage of the game. And perhaps that's why the bond market, in response to these rate cuts just about everywhere on earth, is not responding the way it usually does. It's not. Same here in Canada. We've had 3 rate cuts now, and we're going to get more. And the bond funds, the bond prices have not really rallied significantly at all. They've had a little bounce, but not much. And I think that's why you want to invest in things that are not somebody else's liability, not a promise of repayment, and that means I guess real estate is one. I think stocks is another one. I think commodities, in particular gold, which has been doing terrifically, and which we have run an overweighted position in of quite some substance for 5 years now. And I see no reason to reverse that. But I think that's one reality. You want to avoid promises. Yeah.
Again, I'm deferring to you as the person that's been around. I mean, I've been into this a long time. You've been around longer than me. But that's a position I've always had. For whatever reason, a lot of, from a fundamental standpoint, bonds have never really made sense to me, especially taxable bonds. Maybe I should be even more specific. And it hasn't. And so we've really done our part to avoid that, just in general, because of exactly what you talked about. Let me ask you this. Okay, this is a theory, and I want your opinion on it because I'm trying to make sure this. Tell me if this sounds right. So you brought it up earlier about the coming reluctance of foreign investors investing in the U.S. And I brought up in an interview I had, I think it was with Tom Longo a month or so ago. There was a talk that the French Macron gave back in, I think it was April or May, that basically said what you said, which was, why are we funding U.S. government is effectively, because of the problems they're having there. And so, and that brings a whole nother subject of what's going on in Europe. And there's a bit of a fractionalization going. And there's an economist we follow there who effectively says the EU is in a slow, what do you call it, controlled demolition, I guess you might say. And then you've got Japan. And so my understanding is that, and I'm just, this is for people listening who may not understand, is the lower the yield, that your currency is directly correlated to that. The value of the currency, local currency, will drop depending upon where your yields go. And so if you're in a world now which has become clearly, when you mentioned the U.S. is considered to have still a safer place, my words, to invest, relatively speaking, I mean, the tide's going down and all the ships are going down with it. So that benchmark is lowering, I suppose, but everybody's is going down. But when you've got, say, a country like Japan who's been fighting to control their rates for I don't know how many, it's been years now. And at some point, you couple that with the reluctance to start investing overseas. What happens in a situation where you've got the Federal Reserve Board lowering rates, but then you start having more and more of these foreign governments not only not buying more treasury bonds, but actually dumping them on the open market? And this is an argument that Russell Napier makes, that's kind of his premise to what's going on and with Japan and China as an example. But shouldn't that send rates back up? I mean, it's almost, aren't these two forces working each other? That's my question.
You're absolutely right. It should force rates back up, and I think that is why I'm reluctant with the size of the United States debt to predict that there'll be countless more interest rate cuts, even if the economy weakens, because the government, in order to function, has to raise money on an ongoing basis. And I'm not even talking about train wrecks coming toward us like the Social Security deficit and stuff like that, right? I'm just talking about right now, the government's spending priorities on current spending. They're not going to go away. And so if there is a reluctance of people, let's say the treasury bond market simply does not respond the way it usually does to rate cuts. And so that means quite a number of mutual fund managers are going to say, well, what am I doing in bonds here? They're not responding. I'm better off in this environment. I'm much better off buying a couple of pipeline stocks or, something that has a big moat around and pays a decent dividend, and you've got all kinds of utility stocks that pay decent dividends, and you've got different areas of the market pay splendid dividends, and money managers may just say, well, we're going to reduce that traditional model we had in mind. And have less bond exposure, less fixed income exposure, and more exposure to dividend-paying stocks, for example. And the foreigners at the same time may say, well, this debt dynamic just worries us. Now, the Japanese don't have much to worry about when they look at the US because they're in a bind because, number one, their own government now, their bond market is totally financed by Japanese people, but their debt GDP ratio is 3 times what the U.S. one is. It's horrific, and Japan is really geopolitically completely enslaved to the United States. They've taken a very aggressive posture against China and invited the U.S. in to build bases and all that. So they're married to the United States. They have no other option. But China is an interesting example. What are they going to do about this considerable exposure they have to U.S. Treasury debt? Probably not buy more. Probably reduce the load they have. I don't know. Lots of things can happen, and you have an election pending, which presidential election, and one candidate, as you know, says he's going to put between 60 and 100% tariffs on Chinese goods. I don't know what that's going to, what the reaction will be to that. It's an interesting question. But you're right. Debt, the debt growth is such that a reduction in interest rates in the federal policy rate is not necessarily in the cards over time. There may be a temporary another 50%, another 50 basis points to 25-point cuts or something as the economy shows signs of weakness. But at one point, they're going to have to elevate again because of the size of the debt.
So here's a question. Well, you may have just answered it. I've heard this a few places. Again, extremes. Zero interest rates, negative interest rates. Is that even on the, do you think that's even possible?
Not in the US. I think it's possible with, if your debt GDP ratio is something like 30%, I'm thinking of countries like Switzerland, then that becomes a possibility in a recession scenario, but I can't see that in the United States. If you did that, we should never dismiss any outcome completely. But if that happened, your inflation rate would skyrocket.
Yeah. No, that's good. So you brought it up. I know you've written about it a lot, and I appreciate your view because, being from, outside of the U.S., your views are a little more objective on presidential elections. I mean, so this is billed as the election that saves the country by some or doesn't, depending upon whose side of the fence you're on. But I mean, is it a big nothing burger, or do you feel like this is significant? Towards not only where the U.S. is headed, but maybe its impact on G7, other countries.
Let me first say this. I mean, the polarization situation in the United States is not unusual in today's context. We have a similar dynamic in Canada. You've just seen the French election, Spain, Italy, Germany, horrific polarization everywhere, And I think that has a lot to do with the structure and the reporting methodology of the media, and just what's happened in the last while. What's really unique about the United States is you have considerably more faith by the voters in the party of their preference. I just spent a while in Europe earlier this year, and I talked to Germans and French and Swiss and others. They're as polarized as you are, but there's no liberal who says, as long as we keep the majority, everything is good. And there is no conservative that says, oh, if only we get to power, it's all good. They all have no faith in the political class. It's gone out the window. And the Brits are a little different. They're still in this, traditional mode. But first of all, looking at the United States, I still have tremendous admiration for the American individual. Americans are entrepreneurial. Americans have a can-do attitude, which no other nation I know of has. And so I think that'll always provide a backbone. America is also decentralized, which is a big, big advantage. When your president says, let's do this, well, the next morning you have 18 governors who say, you do that, go fly a kite, You may do that, we're not going to come along with that. That's because the state is in many ways still the sovereign in the United States. And that's a big advantage. But now, as to the presidential election, I think if you look at the really big dynamics in the country, there is no difference between the Democrat and the Republican side. And what are the three really big dynamics? We've touched on all of them. Number one, the prosecution, the pursuing the forever war, right, is number one. Number two, none of the parties is effectively doing stuff to prevent the continued collapse of the middle class, because both parties are firmly in bed with the concept of the monopolization, and the monopolization of the commercial structure of the United States is what causes the growing income and wealth disparity. So there's no difference between them. There's no difference in terms of they're raising the deficit and the debt further. They both seem to be committed. Of course, Donald Trump has different views on stuff like taxation, and his theory is that that'll act as a positive force, and I think entrepreneurialism always does. And then there are some other minor issues in some people's minds, very major, like the environment. The two major parties have very, very different viewpoints on environmental management. And so it depends what you really want to do, but there is no savior. And I think what really matters for people is, I believe, and I would say the same thing to in a Canadian interview, what really matters is what we do and how we act as individuals, that we basically speak up for our beliefs when the opportunity arises. And I do that in my newsletter, and not everybody likes what I have to say. But I think it's very, very necessary for people to speak up, because if they don't, the whole dynamic in which we're caught is going to continue, escalate even. And for the average person, that is a huge, huge negative. And I always say, if I can profoundly influence 5 or 6 people in my lifetime, I have contributed to a better world. That's my standard. And I think that's true of everybody. And this blind faith some people have, if only Trump gets in, all the problems are solved. Or if only Kamala Harris can hold up and get to be the president, all our problems are solved. And no, that's not how it works. So the weight is on us as individuals.
Yeah, I mentioned Charles Hugh Smith. That's exactly, we kind of came up with the same thing when we talked. Now I will say this: when you talk about, I know Trump, when he was in, he did. I mean, he was. When you're talking about war, maybe from a economic standpoint versus military, because he did try to get us out of certain things, I think, and I think you hit on a good point, because I do. And the other thing he tried to do was delegate a lot more back to the states. I don't think people realize, through the educational system that's just completely eroded over the last 30 years here, that the states actually are sovereign. They're their own, as you said. And I think that is a big strength. But I'm with you. This idea that the white horse is going to come in and save the day. The problems, and I won't even call it corruption, because it's just a system that's just grown and like a cancer, and kind of, I don't know what, metastasized over the years. To expect, we're all incumbent. We have a responsibility. Agreed. And I like what you say. I like what you write. We've tried to take our stand in our business with just keeping God in the forefront. If you go to our website, I wasn't quite, my partner, she's out there with it. And we've defined our business around, spiritual values and the types of clients we work with. And we've drawn some lines that maybe, like you say, aren't necessarily popular with people. But I think that's it. I think everybody has a role in the change that needs to come. I agree with you on that. And so I think there's going to be probably a lot of disappointed people either way, for the reasons you bring up, which is my party didn't win, to even the people whose party did win and they're expecting something to happen. I don't think I'm with you. I just think it's bigger than that. I think it's bigger than that. So I just appreciate the real view. I got to ask you a question. You brought up Europe. Why are generally speaking, Europeans what's the difference? Say, why are they so disillusioned with their government? Where did that break of confidence come that maybe hasn't happened here yet? Do you have I'm curious.
Well, I think it's happening in Canada too. It's not yet developed fully, but I just find when you listen to the articulation of to the justifications that different politicians have when things don't go well, it creates disillusionment. It creates disappointment. And I somehow think, there is something in the American, maybe it's because you only have 2 parties, that you are more firmly believing that one of them is the savior and not the other, and the other will lead to utter destruction, which is where we are right now. I mean, you both have, basically, I have all Democrats in the country and all Republicans say, if the other side wins, it's the end of America, right? That's an amazing statement. I think in Europe, it's almost the reverse. It's the end of the kind of life we knew in most of our existence, no matter who wins, because they're politicians. But the other thing in Europe that's manifestly, I grew up in Switzerland, and I've been very close to various European nations. And at that time, to become a politician was in their very late 30s, but much more typically in their late 40s, and had made a success as a lawyer, as a businessman, as whatever. And now they enter politics, right? And now it's all career politicians. They've never been outside of that dynamic. They've never had to live with the consequences of their actions. Look, I mean, when I was in the banking industry in Canada, I ran a company. I was with a company for 11 years called Guardian Trust Company. We were a nationwide Canadian trust company, which in the US would be a bank. And when the last 3-4 years, when I really ran the place, I went against the dictates of the board of directors 2 or 3 times. And I knew that if my particular suasion, my belief did not come through, did not result in positive things, I'd be gone. I'd be fired immediately. And that's a consequence that you have to bear for your actions. And even in the corporate industry, in the corporate context, things have changed so much because I always drew in consultants on issues like marketing or other things that I knew nothing about. I listened to them, then I made the decision. And if it was the wrong decision, it was my head. And in politics, the worst that can happen to you is you don't get reelected. So what? So you end up on the board of Pfizer or something like that. It's not a bad deal.
Oh, you just reminded me of something. I can't remember the name of this movie, but it was about the 2007, 2000, or the 0809 financial crisis, and all the players and the layers of unaccountable people who found themselves, going from a position at some bank, to serving on some board at some university. I mean, and well, I didn't do anything. I mean, completely oblivious or convinced that there was no accountability. And what you're talking about, it's just integrity. And I appreciate about you. In fact, I was going to say, I'll pay you a compliment, but I read your website, as a fellow advisor to clients, and I read the way your comments and how you lay things out, and there's just a high level of integrity there. A very upfront approach, which I respect because I feel like in our industry, it lacks. There's an element of lack there, and I think that's it. It gets back to what you said earlier. What kind of people do we want to be? What do we want to put out into the system? And that's why I left the bank. I mean, I worked at a bank. That's how I got into this type of work, and it didn't take me long to realize, that it just wasn't a place I could properly help people. That was my motive. I felt like I could do better on my own. That was my mission statement that, yeah. So, listen, I appreciate it. This is a great conversation, Peter. I feel like it's really helpful for anybody who wants to listen and just maybe commiserate a little bit, but also get a reality check, because I don't think there's a lot of honest conversations, at least on these topics. They're hard to find. So yeah, so I just appreciate it. I'd like to just, connect with you every 6 months. I think it's a good, benchmark. Your views are just down to earth and realistic, and I appreciate what you're doing. Any final thoughts just as we head into the home stretch here?
No, not really. I mean, I think you've covered it well, and it's been a pleasure being with you and talking about this very, very open conversation. I love that, And by the way, like you said, my newsletter is available. It's free. We don't sell anything, so it's a free for all. So But it's always great to talk with you, Emerson. Yeah.
Likewise, Peter. I appreciate your time. God bless you, and I'll look forward to seeing you again soon.
Yes, likewise. Take care.
Thank you.
Emerson Fersch is a registered representative with and securities offered through LPL Financial, member FINRA, SIPC. Advisor services offered through LPL Financial, a registered investment advisor and separate entity from Capital Investment Advisors. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. The guest speakers and the companies they represent are not affiliated with or endorsed by LPL Financial or Capital Investment Advisors. Individual tax and legal matters should be discussed with your tax or legal expert. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.